Okay, hi there, guys. Let me know if you can hear me okay, and we'll get up and racing. See you on today. Big rip on the Hang Seng. Is that phone? All right. Let's just get into it. Welcome to Trade the Structure. The live stream. It's the 15th of November, so we're stepping closer to Christmas. Getting there bit by bit. I hope we're all hanging in there. So far, so good. So what I want to go through today is just we're going to get into some shares. I've just got a list of what I'm looking for. I just done a bit of a filter through, seeing which ones take my fancy, and then we'll talk through those. And then obviously we'll do later on, open it up to see if anyone wants to look at anything. It can be anything at all. Just watching the SPY here. The SPY is actually, this is the ASX market. SPY's popped up in the resistance zone that we're looking at, and it sort of chopped around there and then took off. So it did play out to plan to some extent. I didn't trade it. I just actually don't do a lot on this. It's more the Hang Seng that I was sort of playing around in. Hang Seng's just opened, and that's flushed down and ramped straight back up. So what did it give us on the upside? So the downside I don't think worked for our strategy. Missed by a few points, which is typical. It's going to miss. It's going to miss just by 1 or 2 points, and it got there on the upside. So all in all, the strategy is just a break-even day, really. A loss and a win. You move on to the next one. Nikkei, which is pushed up in that resistance zone 29,830, and it's just backing off at the moment. We'll see what happens with those. But yeah, the Australian market, as expected, it's kind of bullish at the moment. Trying to follow the US high. The ASX itself is looking not too bad. Let's just get that up. I'm on the ASX now. No, I'm not. That's it there, and it's looking pretty good to me. You've got like this big trend up. We've had a bit of a flush out. We had a flush of some longs, and as soon as there's a bit of a pullback lately, all the bears are jumping on, and they're just getting squeezed out again when the market's sort of propped back up again. So at the moment, it's all about, it's all about inflation, the Fed, US Fed essentially. Market got knocked around. I think it was Thursday, our market anyway, because employment data it missed expectations quite a bit. And I think it surprised people. So we got sold off, and then I was talking to a few people later on and said, no, this will bounce because now we're taking rate rises off the cards, in Australia, at least for a little while yet, because those numbers are pretty bad. That's the idea. And sure enough, it bounced back quite a bit that afternoon. Once it had flushed out, so the market's going to flush. People look at that initial reactions, oh, it's bad, the employment's bad, sold off, and then bounced straight back because I think Australia, I don't know if they're doing QE still or they're easing it off, whatever they're doing, but it's still low interest rates for longer. That's the idea with those employment data. Then the US is obviously looking towards the same thing. No employment data, then it won't be going too far. Let me just refresh something here. Still looking good. I think we're coming through okay. So yeah, it's a bit of the same. G'day, Pete. Can you hear me okay there, mate? Just going to make sure. Yeah, so it's the same old story. Inflation hasn't really changed. It's still the main focus. CPI numbers out last week in the US, a lot higher than expected. So it's only so long that they can brush aside inflation problems. and keeps saying that it's going to just stick around, and then we've got what $1 trillion of the Biden infrastructure plan. I mean, that's going to create some sort of inflation. So they're going to be forced, I would expect, to doing something sooner or later. Indices at the moment, I think they're going to brush it aside until something happens, until the Fed talk it up, because in the past they've expected inflation, they expected the Fed to say something. Fed has said nothing, said just hold your horses, we're not doing anything just yet. So until they do something, that will be probably the time the markets might take a bit of a turn, because now I read something this morning starting to talk up about the high indebted tech stocks that would everyone was said you raise rates, then they're going to get hurt the most, and they've been reacting that way. Now someone's trying to talk them up, saying no, it'll be okay, it'll be okay. Really, Friday night there was probably 4-5 companies lifting the broader market S&P. The Dow was up slightly, but nothing out of the ordinary. It was just the FANGs, which I think did the heavy lifting across the board. So when they make up such a large proportion of the broader market S&P 500, 500 stocks, there's probably a handful of them that are doing the heavy lifting there. It doesn't say a lot, so we'll see how that goes. Anyway, we're going to get into a couple of stocks now. I just want to, make sure I don't fall off. I just want to make sure, I'm just going to go through a couple of shares that I'm looking at. Where am I? Go away. Yeah. Oh, no. Go away. So I'm bringing up the wrong. Mouse is going all over the show at the moment. What did I want? I wanted drawing tool. There we go. So we'll kick it off. This is a list. I've got to update this list. So anyone that's on the Trade the Structure as a subscriber, I haven't updated the list for the stocks. I mean, there's been some good ones. These are the current list I've got here. This is a previous list there, which I've got to whittle down just to see if anything's not trending like expected. So if you jumped on board a lot of these, you've been doing all right. That's AAC. That's trend is up. There's not much to talk about there. It's just ticking its way higher. It is getting a bit extended away from the MAs. What I don't like to see too much is the market just keep going high. You get these MAs start to get further and further apart, which means it's getting more and more stretched, in my opinion. So the way I'd trade that is just I'd be looking for just a bit of a pullback, see if they can sit on top of the MAs again and then go. You might be looking down to your daily chart. We might have just got that pullback to the MAs now. So the daily's okay, but the weekly's looking a little bit stretched. And if you see momentum easing too, you're just going to keep an eye out. If momentum starts to ease on the lower time frame, it's probably going to work its way back to the weekly. And the markets will go, trend higher on the daily and then go, the first pullback on the weekly works out to be on the daily chart. The lower time frame charts is a more complex correction, if that makes sense. So what I'm talking about, what I'm always looking, that's where you're looking, using your two different time frames. If you've got, we spoke about this, I think, a few times, Pete, that's your weekly chart. It could be the trend up. And the first pullback here could be, this is your daily. Daily's a bit different. It's working its way up. And then it goes into something's wrong with my computer there, but anyway, it goes into more of a complex correction. So that could be your weekly pullback. So on the weekly, it just looks like a pullback. It sort of looks like all green, mostly green, green, red, but a trend up in the weekly. And then you've got these little minor pullbacks on the daily, and it goes more of a complex correction when you get a decent pullback on the weekly. But the pullback on the weekly is nothing too much to worry about. But here, if you're going to add or you're going to jump in, you just be careful that you're not going to get cleaned up here. I mean, it could turn out to be completely different, but generally, that's what I'll be looking for. I want to see the weekly. If it's looking a bit extended, you can probably assume that we're going to be going into some sort of pullback on the weekly and a complex on the daily, correction on the daily, meaning a lower low, lower high, lower low, before it starts to lift again and we start to get this kind of action where we can buy because we're looking for another trend up. We're anticipating this is going to happen on the daily again, and we're going to get this kind of action on the weekly. We just turn around and go straight back up. Okay, so that's essentially how I'm trying to flick around in my time frames. So when I'm constantly looking at the weekly charts, it's because I'm just trying to get a gauge of how stretched it is. I mean, this market, MACD is not saying it's too stretched. That was more of a stretched market when the MACD is quite high. But when you're getting further away for MAs, it's kind of just been ticking higher without a pullback at all on the weekly, then you might want to just drop it to the daily and be very careful if you're looking to jump in. It just means that the outcome is more known. Okay. Now, at CSR, you had that trend up, consolidation sideways. It's sort of flushed out. You've got this complex correction. You see on the daily, lower high, lower low. Then it's held quite nicely. If you flick over the weekly, that's kind of your pullback on the weekly, and we're holding on the MAs. Could be looking to go higher again. So that's still playing out quite nice. XRO, I'm not really. I'm probably going to take that off the list, to be honest. The weekly looks okay, but it's been knocked down quite a few times, and I think it's coming off a high. It may need a bit of a deeper correction. Now that's a deeper correction there. It rallied up, straight back down. I don't like the way things just go straight down, straight up, straight down, straight up. I don't think they're not settling to build a base. You've got to work off a base. Okay, and they're not seeing that there. XRO, ALU on the daily. I mean, this could be a nice little daily trade through $40. Keep going high. We're going to contend with these highs. Back on the weekly, up at this level of 40. So I'll be just watching that for now. It could easily power through. If it gets through and it holds above you on the daily, you push up on the daily, then it's probably going to be looking quite good. It's going to look to extend, but for now, I'll be keeping an eye on that one. NEA, forget about that. Last couple of days, and looked at it for a while. NWH, yeah, nothing too flash. It's just working off the bottom end of a range potentially, but the weekly's down. Flick over the daily. The daily's sort of sideways, so that's probably something to keep an eye on. But you want to see, generally what you want to see is a push above the MAs. What happens in the first pullback? We start to hold the daily MAs. Okay, then the weekly could be looking to go sort of that bid zone to an offer zone, which could be up here at $3. Okay, that's the reason why I've got that on the list there. NWH, red's trending high. That was actually one that I was going to. No, I was looking at that today. That's going the way we planned. You've got, this is sort of the consolidation you're looking for. First push up, it's expanding out of the MAs, out of that consolidation zone. You don't know what's going to happen until you get the first pullback. When buyer starts to point in a higher level, that's when you want to be you refine your trading around that area, as opposed to just buying on that break here and finding out that it's just a flush and you turn around and get slammed again. Okay. But when they break out of a consolidation or congestion area, hey, Jared, fantastic, mate. Through a congestion area like that, and it starts to spike, or not so much spike, but if it pulls back and holds that MA, say just above the 20 and the 50, the 20 is up above the 50, and we're holding those MAs there on the first pullback, it's showing you some strength in buying. That's where you want to, I'd be looking for my entry there. You can potentially take the break at 22. You know where your risk is. You box it up below 20, and away you go. That weekly, so the weekly had a bit of a power high, minor pullback, so it's showing some strength. It could be, if you're looking for that one there, say taking that break there, you're looking up to those previous highs around here, 36, to see what happens, because that could be all part of a major congestion on the weekly chart, okay? Which means that if we power into spiking that 36 zone and you're waiting for it to go to the moon, you could be sorely disappointed if it goes all the way back down to this bid zone or lower. Okay, it's all about managing risk, remember. That's how I'd be attacking that one. Red, AMA, nothing to talk about there. BKL, not too many. It's heading higher. It's not doing too much there. It's more the weekly. The weekly's sitting on the MAs for the first time. It's had this big move down, pop up, move down, flushed out a lot of buyers. So it's done a lot of work in flushing out buyers. Spent most of last year and the start of this year, or most of this year, up until that green candle there, which was August, right on my birthday, by the way, 23rd of August. Great day, that. Where it started powering higher. It pushed up, and since then it's pulled back and it's sort of holding those MAs. I'm not a big fan of that price action because of that, and it's because that on the 18th of October, so we popped in the highs, we sort of pulled back, we got through here, pull back, so we're not going on too hard. It might just be that it's trying to build, but it's decent price action on the week. It's something to keep an eye on because it can start to get a bit of a move on. That's Blackmore's, BKL, CGF, having a problem with that. Challenger Limited. It's going up on the weekly, on the daily. And the weekly, you kind of potentially run into that high previously where it reacted down. Okay, it doesn't mean it's going to this time, but it's something that if you're long, you've got to watch that level. Okay, don't just go. I mean, I'm talking about trading shares. I'm not talking about investing. anything I sort of talk about is the way I trade is about trading. Okay, if it reacts off that zone, I've got to worry about where my risk is. In investing, you tend not to worry about risk too much. You tend to just hold it. You expect over time, you might hold this for a long time and it gets up to those highs because of, your fundamental reasons. Okay, but for me, I'm trading it. I'm looking to take chunks out of the market. That's how I trade anything. So when I talk about that, I'm talking about it's getting up to these highs. If you're looking to buy here, it might, depending on where you can get your entry, if it's something like this, that's beautiful. You sort of got that move down, first move down, pop up, secondary move down, got a higher low in here. You take the break of that higher low, even a bit later on, sitting on the MAs. You're boxing your risk up well. You're preempting the push through that high at 675. So if you're doing something similar here, you're preempting a push through 725, maybe, but that's right at these highs. So you just got to be careful that it could pop up and then slam back down again. So you've got to know where your risk is. You're not going to buy into a highs like this with your risk miles away. You're going to have tight risk because you can get it wrong and it stops you out and goes again. You can always get back in. You're not risking a lot. But when you get it wrong down here and you've got wide risk, that's a bigger hit. So 1-to-1 on a wider risk is a lot higher. That's the art of, I guess, technical analysis, if I can spit that out. To be a technical analyst, you're trying to refine your risk reward. You're trying to increase your risk reward. You're trying to refine your risk on any one trade. Okay, and that's why I love it actually. Short story, CGF, QBE. That's on the weekly. It's not really too flash, but it is building. So that got slammed. Pandemic beating. It's worked its way back up. That weekly is sitting on the MA. It's reacted. You can see how it's spiked up after reacting down in here. So we've reacted down here, it's spiked up, pulled back to the MA. So it's reacting off the MAs, which is good. And this last week wasn't so crash hot, but it again reacted off the MA. So if you get into the daily and we just look at what's happening here, we ideally want to be above the MAs like this. Okay, it flushes down. Anyone that's looking at the daily, not a weekly, is not sort of understanding the full story for the price action. It may have sold it here, and then it pops back above, holds the MAs, and you do something like this. You're getting off the daily. The daily MA 20 is still above the 50. So technically, you should be in a buy mode as opposed to anything else, not in a sell mode. And it's starting to react off the MAs here, and you might get that little spike. And that's where you're looking for because it's minimal risk with a good payout. And that's what I'm talking about before about your risk reward scenario from technical trading. QBE, where are we? WSA, okay, nothing too flash there. Yeah, it's just a massive, look at massive base build at $2. But every time it sort of gets up towards these highs, just get up to the highs, slam down the base, got through the highs, slam straight back down again. So something's amiss there, I think, fundamentally, but we'll keep an eye on that one. Oml Weekly Consolidation through here, daily, nothing to really keep an eye on too much there. Lot, I think this one's doing well. Weekly starting, that's a cracker. You've had so much time doing nothing, going sideways for a few years, and now it's starting to lift. So as it starts to build momentum and builds a bit of a following, it could really start to power on higher. So the pullbacks get shallower, the expansionary phase is higher, or the run higher, the rallies get harder, if that makes sense. They go higher, and the pullbacks get a bit shallower until it runs out of steam. So that's why I'm looking at this one here. It's looking quite good. LOT. CXO, Core Lithium. So that's, trending highest. A lot of the lithium stocks are doing well. Maybe running out of steam here. I don't like particularly that. We've got the push in the high, pull back, held, popped through the highs, didn't finish above it, reacted back down again. So maybe it's starting to get a bit weighty up here. Look at the weekly to see and the weekly's probably saying the same thing. You had a leg up, pull back, a big leg up. So that's your second leg up. When you're trading around that 60 zone, anyone that knows anything about technical has already got this on the radar. If you haven't bought it, ideally you want to buy it down here because you're looking at this weekly. It's holding, and you start to buy it on the rise somewhere in here. That's prime. This is not prime. This is late to the trend. Okay, when you're late to the trend, you've got to hope that you've got a lot more people willing to buy it up as well. Can everyone see the top of my screen there? I might have to just. Is that better? That might be a bit better, is it? Transition. There you go. I think that's better. We'll be able to see the top there, and you can. All right, good. Well, CXO, so that one there, we'll keep an eye on that one too, and CAI. That's going the right direction. The daily is trending higher. Look at the weekly. Probably hard to see there, but it's starting to hold in the weekly too. But you've just got to contend with 70 now. So the closer we get to 70, the less buyers may want to jump in. That's all. All right, let's go on to some other ones that I'm going to go over here. Daily, just things I've been watching. I'll start at the bottom, AGE, and then we'll open up. You guys can have a bit of a throw some questions at me. So this one here. So what I want to I'll go over some ones that I'm watching at the moment, and just explain why I like it, why I think we've got to preempt what I'm going to see. I'm always trying to preempt what I expect to see, and I plan it out. I'm seeing the start of ideally a good setup. Whether that plays out, it's a different story. But when I'm seeing these kind of actions, price action, I've got to put it on a list. I've got to keep an eye on it. Okay. So looking at the weekly, and we'll drag that in. You've had a run up here, pull back to the MAs. Had a big expansionary phase. Okay. That when you're getting up here, you don't want to be buying on the third weekly candle when it's just rammed up from 3 cents, because you've got to ask yourself, where is your risk? And like I said, if you're trading it, you just got to step aside. You've got to suck it up, step aside, forget about it until later. Okay, until it starts to set up again, because you don't know where it's going to go to. But when you're buying up here, and I say you don't know where it's going to go to, you don't know if this is going to be a pump and dump and it's going to come straight back down to 2 cents. You're buying it at 10, comes back down to 2 and settles there for the next 2 years. You don't know if that's going to happen, or you don't know if it's going to just ramp up again and it's going to go to 10, 20, 30, 20 cents, 30 cents, 40 cents. But until then, if you're on this third green candle on the weekly, you're buying it sort of around that 10-cent mark. You can't, ideally, if you're trading it, you don't want to be jumping in because you don't know where to put your risk at. But if you're now watching it, it's starting to show something. I mean, it could be a bit extended on the weekly, and there may not be much more in it, but I don't know anything fundamentals. All I'm looking for is if the technicals start to show me a pattern again and start to show me that buyers are happy again to step at 7.5 cents. You go that, we'll just go to the daily. If they're happy to step in it here, I'm not going to question why. Why should this be going higher? All I'm looking for is that to start holding. Okay, so let's just take that there. We'll get a bigger picture. All I'm really caring about is if that holds, we've got some contraction. It's quite clear. Call it a triangle, call it one. I call it a contraction. That's an expansionary phase which you're trying to trade in. Your contraction phase is when the market's just in pullback mode. Okay, now you don't know if it's going to get lower high, or you don't know if it's going to do exactly that. It's going to push up, pull back, start to contract. That's quite nice. If you start to lift like that, that's where you can analyze your risk, and away you go. Okay, so really, if this starts to push up through 8.5 cents, that's where I want to start analyzing. Is that good enough? Through 8.5 cents, we're starting to push through a lower high, meaning, one of these sides, sellers or buyers, is going to run out of steam sooner or later. As in, either the buyer's going to give up and the seller's going to win, or the sellers are going to give up and the buyer's going to win. It makes sense, but you don't know that just yet because we're still holding high lows. High lows, buyers are in charge. Lower highs mean sellers are in charge. Until one of those breaks, we don't know which way it's going to go. And you're not going to buy it just here anticipating, because that's not trading, that's just guessing. Okay. If you're a fundamentalist there, you might say this is going to $1, so I'm happy to buy. I might weather some heat, but for me, I'll be looking for that break there. I know where I can box up my risk, and away you go. Okay, AGE, MLX, I think is another one that, you're looking at the weekly. Well, I wouldn't say that it's extended, but we're starting to trend higher on a weekly. So we're in a good stage in a weekly chart. If you look at a daily, it's knowing that the weekly's heading higher. I think momentum, like I like to see it. I mean, look at it back here. Momentum sort of come down in 2 ways, but it's holding. At this stage, when momentum's coming off, meaning buyers are giving up, the buying strength is easing, sellers are starting to come in. The problem is when sellers are starting to come in, it's getting soaked up. So there's no buyers starting to hit the offer, ramp it up. All they're doing is sitting there on the bid. But it's like there's enough volume on the bid where sellers can't push through. Okay, and that's where you're seeing price go nowhere, go sideways. So when momentum eases, or the momentum up eases and comes back to that zero line on that MACD, and price goes sideways, that's a good sign. Okay, that's a sign that you potentially want to get involved in the long side. Okay, and it didn't really go on too far, but even though we had this pullback here, it got a bit deeper. It went back into that same area, had a bit of a lift, didn't want to go on with it, come back to that same zone, and then we start to take off. So if we're going to start to do that now, MACD start to come back to the zero line, momentum's easing, price is going sideways here. Okay, so if you're drilling on that one, we start to take off, we just start to get through this high. I'll be happy if we start to get a bit of a pullback. I won't draw that, but a minor pullback, hold a higher level, say 37 or so, back on the MAs, and start to go. You can box up your risk, anticipate a push through 42, and away I go. Okay, that's what I'll be looking for on that one. RAC, daily essentially sideways. It just means if you're looking at this weekly chart, that's a massive flag. Okay, and the good thing is, we'll go back to the daily. Little things, is it holding? Who's starting to win out? It's not clear. I like these areas because, look, it's not clear who's winning out just yet here, but that's a clear line in the sand for bulls. If bears start to push it through, then yeah, that's where you might start to get a bit more of an unwind, because once they start pushing through there, you don't know where you're going to. You don't know if you're going down to here, you're going to break, it's all over. It might be, like I said, a pump and dump, and people just start selling into it, and buyers are not interested. And you got to be wary of those two, by the way, because there's a ton of them around. People are, all sorts of people on Twitter pumping it up, saying this is a great stock. They're getting IPOs and they're selling their IPO shares or free shares they might have, and it happens all the time, and they're selling it into you. So they're trying to pump it up, create that euphoria, get the market buying it. If it can't get higher, they'll dump it. If it does go higher, they'll hold, they'll offload some as it's going up. It happens all the time. You just have to be wary. You can understand that if you're trading it here and you think it's a pump and dump, you can still trade it because it's set up great. You don't know where it's going to, and then you manage your risk. If it starts to roll over here, you might have looked at that as a gain. Okay, even if it was a pump and dump, and then it comes all the way back down and does nothing for years, like I said. There we go. So a bit of contraction here. You've got lower highs. Okay, they're still holding here. At the moment, that's 360 level. If it can start to hold through here at 320, I like that because you've touched on it. I don't know why. There's certain parts of my screen just not, I can't draw on. Held it there, retested through, but held it only slightly lower. And if we start to hold a high low here, it's like a double bottom with a higher low. I'm biased up. Okay. So that's what I'm looking for. We start to get there. We start to push up through 360, then that's great. Then I'll be looking for that pullback to the MAs on a daily basis. And I want something ideally like this. If I can get something like that, this little, oh, why isn't that working? I've got to move it all the time. This little high low, that's what I'm looking for. Okay, that'd be great. If I get that, I'd be looking to get in. Even something like that, sitting on the MAs. We start a little spike, consolidate sideways, goes again. Okay, that's massive. A long time going sideways is showing some good, good support for the stock. It's not, doesn't mean it's not going down. It just means to keep an eye on it for now. We'll get on to bet. There's another one that's kind of showing me, had a solid move up there, got knocked down for whatever reason. Like I said many times, I know Pete knows, I'm not sure if you know, Jared, I'll be looking for a secondary move down, because the secondary move down catches people off guard. They get that flush. They're always looking for bargains. It's FOMO. They just want in. They find out they're on the receiving end of a second move. Now, you don't know if that's going to turn into something else, but they might buy it here, buy these couple of green candles, buy it up, and it gets dumped on again. That could be deeper. This one wasn't too bad, but I'm ideally looking for a secondary move, or you're working off a higher low. Once you're working off a higher low, you know that the momentum's starting to turn back up. It's on your side. But if you're not, and you're just trying to pick there's a support zone, let me just say, through here, and the market comes down, and you're just buying willy-nilly in here without some sort of confirmation, who's to say it's not going to do that, come up and keep going down? Okay, you just don't know. You're better buying like that. It might flush, hold the higher low, go. That's where you want to buy off support, ideally. So that's something similar there. We'll just see if, the good thing is, see this support through here. Ideally $1. Pushed into $1. I don't need to draw this up. I'll draw it up anyway. quite clear on this one, really. That's through there, $1. That's what I'll be looking for. Okay, we had a big flush here, straight back up. And the good thing is it took out that level there. Okay, so you got one. You couldn't tell you why that's happening. Secondary move down, straight back up. So it took out this level here, high low here, didn't go anywhere. That was kind of like a reverse head and shoulders. I don't really trade head and shoulders as such. I don't look for them. I'll be trading as a high low. It didn't go anywhere. You got pumped when it comes straight back down again. So this is, I think, the bigger picture we'd be looking at. You've touched support here, flushed through, touched it again. Good sign. It reacted back up and off. It's still respecting this move down here. Okay, so as long as we don't go through again that dollar mark and we start to hold up, again, it's just all about if we can start to break. Pattern I'll be looking for is we start to break up through, see if we can get a high low after the break. And that's kind of where you want to box up your entry after you start to go through this resistance through here. Dynamic resistance, you call it. All right. So putting the shares, we've got, if you want something to look at, Pete, Jared, just whack it in, put in the code, and I'll have a look at it. I got two and have a look at ASM, AX1. I think I was looking at them before today as well. I bet FCL was maybe one that, look, FCL is good. You can see the weekly, it's a bit the same. You know, this push up here, consolidate sideways, headed higher, pull back, consolidating sideways. This little at 375, the rejection of 375 could be the high low. Okay, if we can get up through 450, it could be a goer, and that's because we've got this little pullback. So this is the leg down on the weekly, reacted up and off. We've also got this $4 level potentially. So buying it through this high at say 450, you risk below 4, 50-cent risk, and you're working off this base. Nice consolidation through here. It could be the start of a move up where we're going to attack 570 and above. Right. And this one I think was a bit of a so now on the weekly it's done, had a good trend up here, reacted, come down through, pop back up. It's better looking at the daily, down through here, pop back up, consolidated sideways, starting to lift again. Now this, I think, is just all I would be looking for. I don't want to buy it here. I'd rather see what happens in the first pullback. There's really been no pullback. I discount that red candle, that daily candle, as a pullback. I want to see what happens. I don't want to see it get up to the highs because I think it could be, start to react off the highs and then I'll just forget about it. But if it holds below the highs and we get, so I'll just take a snapshot actually. So this is a high I'm talking about up here. If we can hold below that, say here, that's a high. You've worked your way, basically something like this. We're up here. So as soon as you get this double top, little minor double top, it tends to, if it fails there, it's going to start attacking the most recent high low, which was just in here. It did that. It's resetting. So that's a good complex correction, okay, which we're talking about. Complex correction, I love it because it flushes out buyers. So anyone in this move up here that's had a good run up, the complex correction is engineered to flush them out, put concern in them. They want to lock away some gains. They might be eager. You get all different manner of traders, okay, short term, medium term, long term, technical, fundamental. Fundamentalists might think this is overvalued up here, or they might think it's going a hell of a lot higher. Technical analysts will be looking at that going, oh, well, if it starts to break through here, I've got to think about taking some off or close my position and reset it later because you don't know what's going to happen. And the fact that it pushes through there, starts to consolidate through here is not, squeezing people out. This little flush here, squeeze out a few more, and then starts to reset. So when you're on the other side, potentially if this pullback, this squeeze, and it starts to hold again, then it's building that momentum to push higher. Okay, and that's what you're looking for. It's got that sideways rangy bound action after a bit of a flush, especially this candle here. It's flushed through and then start to lift. So we've essentially got this move here and we just popped up. So we've broken, this level through there. I won't draw that up here. We're broken through there. And I just want to see if it can just consolidate below the highs, not trade up through. That's what I'd expect. And I'd be happy to take some sort of pullback off a higher low, box up my entry, because I know this trend here could start to get a bit of a move on, okay? But if we move straight up to the highs without, straight up here without a pullback at all, I'm sort of concerned that we're going to build a lower high and we're going to come straight back down. Then that becomes a major double top. We've got on the weekly move up, weekly pullback, then your weekly move up, and failure again at the same level is more like this, but on a weekly scale, something like that. And then you're looking for a deeper pullback. Okay, you might just want to step aside. But on the daily, if we can hold just below and start consolidate just in here around the 60, 57 to 62 sort of range, chop around here, give us some sort of entry setup, that might be a good one to blast up through 670. A4 POS, I think there's one. Okay, it's moving down, so we're still in that corrective phase of a trend up. So if you go to the weekly, move up, pull back, move up, we're in pullback mode. So we haven't confirmed yet. Just because it's pulling back to holding 8.5 cents doesn't mean you jump in and buy. There's nothing to say the lower highs say sellers off the highs are still in control. Sellers in control, pops up, sellers in control, pops up, sellers still in control until we start to hold a higher level. It means buyers are fighting back, sellers give up. Yeah, anyone that wanted out is probably out by then. You've had a couple of moves down. We start to build a bit of a base. It perks the interest of other buyers, and then it could be something to work into. So yeah, just watching this one for now, but it is shaping up okay as long as really that 8.5 cent holds, 8.5 cent level holds. Let's pick that out. All right. Well, how long has it been going for now? Time. Oh, wait, it's fine. Let's press our EWC. That's starting to lift. So you've sort of got this ramp up here. You don't want to be buying, chasing the market higher because it does this, it pulls back. So if you're buying up here, you're leveraged to the hilt. It halves in price. You don't really want to do that, and especially if you're using margin, you can get caught out. Another ramp up here, fails to get to the high, comes back down again. But when it comes back down, it's kind of getting supported through here. So what it does, any sort of FOMO buyers that get, that excitable buy that will be chasing, there might be news here that's driving it up. There's the bigger boys looking for the bigger play are not buying it up there. They might just be selling, smacking into it just to, because you can do that. If you've got so many shares, you can offload some just to sort of cap it, all right? Because you want to average in a lot lower, all right? And that's potentially what's been happening here, averaging in, coming back down here, starting to hold. Okay, it hasn't got that spikiness that it's had in the past. Okay, now it's kind of like more controlled. So that's pushed up here, had a bit of a pullback, getting held at a higher level at 8.5 cents, and now we're starting to lift again. So this is ideally what you're looking for. It's got a high low here, off this base around 7 cents, starting to build. No real volume, not a massive. I don't think it does a lot of volume anyway, but it's just something. If you don't have to trade it, but just keep an eye on it for price action. It is market cap's not too bad. It's just done no volume really. Energy World Corporation. But just keep an eye on that one there. TIG. TIG is another one just holds around here. If we can just get a bit more, because that's kind of like the first push up showing signs of going to hold 2 cent level. No volume again, but something to keep an eye on. This could be the first pullback on the weekly. So maybe it's the first pullback. If I get something, I just clean. Obviously, depending on the volume, but if you've got something where 1, 2, so we've had sort of push up, pull back, push up. This is our pullback, but within this, down to 2, if we start to lift here, hold a higher level and go like that, I might be able to hold it. I'm not talking about this little, let me just draw that better. Okay, this is kind of where we're at. So we've come down, pop up, pull back down the same level. We're starting to lift here. If we start to lift here and can hold a higher level, that might be one to get involved in, depending, like I said. No worries, Jared. Well, whacking anything you want, mate. Not too many people in today. Put in something for a look at it. I'm not massive into currencies. I like my indices. But yeah, put it in if you want to have a look. I'll throw out an opinion for you. Yeah, so if we can get that higher low, that could be good. And let's see if it can get another bit of a run on through that level 3.5 and to new highs. That's it, actually. BOE, is that worth looking at? BOE is going. It's extended on a weekly, so it's not something I would touch purely from that weekly, because if the weekly is extended and we're starting to get, we've got some good volume. Yeah, it's pushing on, but when it's extended, I tend to want to see a better setup on a daily chart. I know it could keep going. This could really ramp up. So you've got it from 14 cents to 36, 22 cents. Add that to roughly 22, you've got 44. Well, look, if that's the case, and it's only got to be a few more cents in it, 44 to 50 cents. If it's going to be extended, it needs a macro correction on a weekly basis, then it's probably got a deeper correction due. If not, I'm happy to miss it. I'd rather get involved in things like this. Well, you could have got involved just in here. It would have been quite nice, 330, 32, thereabouts. All right, ASM. Let me just check out where my... So we worked up here and we flushed straight back down again. Good old Hang Seng. Likes to throw the cat amongst the pigeons 3 times a day just to confuse people, but there we go. So that's... Yeah, this here I'll be looking, I'm not going to say I am, but if it starts to hold in here on the 5, I'd like to look at back there. Yeah, that could... So that's not looking too crash hot. There's a level through there. You can see it's touched on it, pushed through, come back up, touched on it, failed off it again, held a higher level in here. It's failed again. It's just whether it's going to, are we going to just grind higher and start to do this? Or are we going to start to fail? If we start to fail, I'll be looking for, something like that off a lower high. Like we're talking about, Pete, the 3 candle setup. Nothing at the moment. We've sort of got the price actions heading sideways, so I don't want to buy or sell within this zone anyway. You want to see it expand. It starts to grind up. These are the harder ones if it just keeps grinding up because you've got this move down and just to grind straight back up again. Harder to trade. Yeah, nice work, Pete. I lost in the sell and didn't get to do the buy, so now I'd be trading that. So you only give it about 5 minutes or so if it doesn't play out in the first, which it did, didn't it? 5-minute mark was when you probably got your profit on that long. Even Pete, if you're looking at, that's the 1-minute chart, with this flush down here, because that didn't work, if you took the high, that high I think worked, that high there, you could have taken the inside high. I know it's in hindsight, but once it flushes those lows and starts to retrace, anyone that's been selling it down just there could be getting squeezed, and that's close enough to the high to expect that you getting long here, it's probably going to trade through the high, so it gives you a lot more buffer, things like that. SPY, yeah, SPY is useless, but anyway. What's the Nikkei doing? Nikkei pulling back. Yeah. Oh. It's kind of a 3 candle setup here, Pete. If you can see that. Market's pressed down. It tends across the 20 EMA. Got a red candle, so it's got this just moved down. A green candle is the very next one. It holds within the previous body, like that. Well, not the candle, but it probably wasn't the world's best, but a little pop up. As soon as we flush this high, this is something you got to keep an eye on. We flush the high and start to reverse when the trend is going down. I like that setup. You could have taken that as a short entry. I probably would have taken that. Your risk is, what's your risk on that? 42, so that's about within my risk. I would have had a 40-point stop on that. But the fact that those 3 candles there, father-in-law calls it the 3 little Indians. I think it's that. He might talk about highs, but I like it within regards to momentum. I like that kind of, because when you've got a powerful trend, I think I was talking about it in the video, Pete, when you've got a powerful trend, strong trend, it's starting to unwind or it's starting to show some strength. These minor pullbacks on the 1 minute might mean that the 5 minutes is going to get pounded. Okay. If it doesn't follow through and it starts to hold into here, then yeah, you give up. But the reason why they play out within the 3 candles, the reason why I like it is because it's kind of a strong move. It's like a pullback here, and sellers were so strong that they didn't get to pull back very far, and they come piling in again. Everyone recognizes that if you've gone long, and they're bailing too. So you've got sellers still piling in, buyers bailing, so they're selling to the market, and you get these extensions on the move. Whereas now it's more of, this is more of a cup kind of, pop up, secondary, first pullback starting to build. So It's not something I'd be looking at. I love these kind of moves. The volatility is higher. All right, got sidetracked, which I do a lot. ASM, ASM, AX1. That's fine to me. The weekly actually looks pretty good on the weekly chart. Let's just go to here. Looks nice. What is it? I haven't looked at this one for a while. You're getting some goodies there, Pete. That's the move. It's in the MACD's showing me some good strength. It's starting to build. The volume is coming off, which could happen but if this breaks into new highs, it might just keep, see that, it may just keep going. Okay, so looking at this, we've had this leg up really on the weekly was that. And the good thing is that you had your secondary move down in your weekly, but the action didn't break the anchor, and that's the anchor to the move up. So yeah, you can see it's got ahead of itself here, and this is where it can trap. This is why I was talking about anchors to a trend up or a trend down or whatever. Know where your anchors are, because when things get a bit expanded like that, a lot of the time the pullback, instead of these shallow pullbacks, it can do it in two moves. It still holds the trend up, because technically for me, if the anchor's not broken, trend up, trend is still in place, whether it's up or down. Okay, it didn't break the anchor, but it had a secondary move down. People bought it here expecting this, previous move, just one red candle up we go. In hindsight, that's a three candle setup too, Pete. It has a pullback. They're expecting something like this. It doesn't go on with it. It fails, and it could squeeze them out. So at this stage, you don't know where it's going. Okay, it starts to break down. Has your secondary move down, comes back to the MAs, so it's no longer really extended, and we start to build again, and then it starts to come up. Let's just go. I want to change it to color, because this is where, if you can recognize that, move up, pull back, we're up. So that's kind of your higher low setup you're looking for. Two moves, higher low, starting to lift. So you would expect it to be pushing through was it 40, 14? I don't know why I didn't show that. That's your weekly. So that's the hypothesis on the weekly. So it's looking good. Your weekly is looking good. It's in a good prime position. It's expanding higher. What does our daily say? The daily says pretty much the same thing, doesn't it? Nice high low, so it's just something to work off. So you can sort of here, if you're breaking through 13, 20, 30, you buy, you're selling sort of kind of at 11.50 mark. Manage your risk off that level, off the high low, because if that breaks, if it gets you in, comes up to here and fails, and you get stopped out, something's wrong. Okay, you don't question it, just get out. Last one, AX1. Now, just eyeballing that structure's good. It's good on the daily that we could have a secondary move up. It's like if you haven't taken a trade, you could probably take the break through the high. Doesn't look that great. I'm assuming it wouldn't look that great on the weekly. Let's just draw it up. Here we go. Yeah, look, it's okay. I don't like it sort of, look, you probably say that's your zone through there. It's coming to that zone, expanded off there, come all the way back in, flushed it, going again. So really what you'd be looking for is that's your leg up. If we hold, the longer we hold this, the more inclined that we're not going to go down. We're probably going to, we're going to perk up, I'd say. Or at very least, if you're not in, you may be looking for a break of say 250, 60, 65. You risk below 240 or so, thereabouts, because that's a higher low. And then seeing if it works up into these levels, potentially, right up to here. That, like I said, you're either up at that level, you're expecting a double top, you're expecting no follow through from sellers, and the market just to keep churning through. Okay, on the weekly, yeah, that you're just gonna be wary this is not a lower high. Okay, so that's why this kind of push through the high. Yeah, I may not have taken this. I probably wouldn't take this because I don't like these. I don't like this little pop through the high. You talk about this high here, it just popped through that high and it's backed off straight away. If that was a strong market, it probably shouldn't have backed off that should have kept ticking higher, but it hasn't. It's had a couple of red days after that, and we're getting green. So we could be, is that high there, high of 256. We're there now, and that's been our high for the day. High is 258 today. So if we fail again today, fail to kick on, I would want to see if I'm going to get, if I am long, and if I want to get long, it has to go through for me. You'd want to see it pushing up through that high at 260 today, maybe. I don't want to see it finish down, and we're even at the moment. It's just break even at the moment. It's traded yet, but it's breaking even at the moment. So if it starts to back off this afternoon, it's not something I'd be looking at. Or if I'm in, I'd be want to type my risk up in it. Right, hey Jason, even if you come in late, mate, you're probably working, aren't you? I bet you. M&S. Oh, looking for exit. Yeah, I was going to say, don't look for an entry up here. The way I'd be tackling that one, I wouldn't be holding my risk if he's lucky enough to get in here at 40 cents or so. You can afford to put your risk around the 60 mark, lock in some gains, because you don't want to cut yourself off from if there's going to be another rally. If there's going to be another rally on this, it's probably going to punch up through it because at the moment the euphoria hasn't finished. Good volume in here, so good volume on this spike up. Volume has just smashed it up. So if anyone's going to chase this, they could be chasing it higher from here. They might say, oh, through 75, it's going to $1.20, which it could go up to this high up here. So you don't want to cut the trade off just yet because it hasn't proven that it's starting to run out of lunch. Nice timing, mate. It hasn't proven that run up is finished just yet. It's on a weekly basis. It's just a red candle. It's backing off slightly today. It's down a bit today, but it's done that before and rallied straight back up. So really, my risk would be around the 60, 61 mark. If it starts to break that, I probably want to take some off, and we'll see how it goes. 3 years, 30s. 3 years. He's back from here, is he? Okay. Look, it's going in the right direction. Maybe partial. If you take a partial and you can get a break-even trade on it by having your risk a lot lower, if you can put your risk down here, well, down below 30, but take a partial, then you've got a sort of a free hit at the next run. It was from capital raise at 50 cents, then share price was 75 cents. Okay. All right. Yeah, so that's what I'll be looking at for Magnus. I'll be putting my risk. I would have taken some off here. The longer it sort of goes sideways here, the more chance, because it's extended, volumes come in, it's getting extended on MACD the way I'm looking at it, potentially rolling over. It's not extended on the weekly, that's a thing. So it's kind of like, what do you do? That common sense says that's going to pull back to the MAs. Okay. So if I'm looking at that weekly chart, wouldn't step near it until it has a pullback. Okay. Whether it does or doesn't, I don't care. I'm just not going to touch it until it pulls back. So if I'm a new buyer, that's the way I'm looking at it. On the daily, I'll probably be saying the same thing. I probably wouldn't want to be buying this until it has some sort of correction because it's had a good run up compared to what's happened in the past. So if everyone else is thinking like me, you're probably running out of buyers. Okay, up here, you're running out of liquidity to keep going in after you, to keep jamming it high. It doesn't mean it can't, because you might look at the offers the offers are fairly thin. There might be someone willing to chase it high. There might be someone trying to ramp it. You don't know. Okay, but if I'm a new buyer, it may just be I'm just trying to explain between the weekly and the daily why I probably would steer clear of that for now until it gets a bit of a pullback. Okay, so if I'm long this from 30s, I'll probably be having some risk under 60. I might, okay, if it cracks 60, bail on some, lock it away because you don't know what's going. You can always re-enter again if you want, and then that means you can have on the other, like if I go half. If I take out half for a profit of 30 cents, a double my money, I might put my risk just below 30. So it means I've got a free hit. If I do get stopped at 30, I still made some money on it, but I'm giving it quite loose risk on my second half. Okay, you don't really want to have potentially all of it at 60 because it might flick through 60 to 58, and go straight back up again. You're out. You're all out on just a deeper pullback. All right, next one. IHL. IHL's. It's ideally the same sort of situation there, Joe. It's Yeah, ideally the weeklies, they're pretty much the same. MNS, if you're long this one, if you're long from down here, great. You've got your risk at 30 cents. You put your full risk at 30 cents. Is that a good run on? Ideally, I'd be taking a profit on that. If you're long from this zone, 35, 37, you're in profit. I would probably raise all of my risk around 47.5 because I'm happy. What I'm always looking for, I'm really looking for a zone to take half off. Just trying to think, depending on where you're getting, if you're getting around here, it's probably, it's 80 cents, maybe a clear level, even maybe 60, because you're getting to the bottom end of this congestion right across the left, if you can see that. Just make that a bit bigger, just got to check. All right. I'm talking about this zone in here. Right. So the bottom end of that level, around is around 60. The top end is around 80, 80 cents. So it's 20 cents, I know, 20 cent range, but take a partial into that. If we sort of spike up into that, which we're up there now. Let me do that again. That's probably clear, isn't it? No, it's not. It's not really doing too much. Anyway, you can see it's trading around the 60 mark, 58. We're just around 60 now. You could take a partial up here. You might give it a bit deeper. It might start to push to 80. You might take a partial up there, 37 cents. Fantastic, mate. Ah, fantastic. Well, longer term position, just let it ride a bit. That's the way I would take it if I'm in here, because I've got that pullback. I'm buying on the rise here. It's expanded up, great. Take a partial up here, and I might just have a bit of loose. I might have looser risk around 47. I don't like having massive risk on the second half. I'm trying to book in some. The weekly is getting a bit extended. We've had push up, minor pullback, another push up, minor pullback, another push up. You can see we've had different phases, about 4 or 5 phases up. So you've got to ask, especially after the last couple of sessions, bang, straight up to 60. Is it getting a bit long? Is it getting a bit extended, which it is on the weekly and the daily? Yeah, you might tighten up risk. So I would expect, this is where I would be expecting more of a complex correction back down. Complex correction back down, it may only go to 50. It may consolidate up here, but if you're out, you're watching it consolidate, showing a lot more strength, you can get back in. Okay, it doesn't hurt. I'm happy to give up some gains as a risk management process. All right, I think that's about it. Might finish up there. Getting a bit tired of talking there. No, just kidding. Yeah, any more questions? If I miss something and you come on a bit later, if you do want to, you're watching this later and you do want to ask a question, just email it to tradethestructure at gmail.com. Yeah, and I'll get back to you. Otherwise, jump on the website, have a look around, have a look at the 5-minute trading strategy. Like I said, it didn't work today, but it didn't lose today either. So I think last Friday we ended good, 2 wins and a loss. So if you're putting the same amount of dollar risk on each trade, the DAX and the Dow as well, then you made money on Friday. So that's all we're trying to do over the 3 trades a day, is trying to make some money each day, which generally happens. The more the merrier. All 3 wins is great. Occasionally you have a loss. The DAX hasn't been performing that great, but that worked out on Friday, and the Dow worked out Friday fine. You could have been going for a few more on the Dow. I think lately it's been going more than what we're targeting. Yeah, you could go to an extra 5 or 10 points if you really want to. You probably want, if it kicks off, it kicks off. It goes more than just a 10. But either way, if you're using the same risk on each, say a $300 risk, then the point doesn't matter about the Hang Seng's a 30 point. We're risking 10 on the other 2. If you're still risking $300, that's all you really care about. Okay, so yeah, take a look around the website. If you like what you hear, leave us a like, it'd be great. And if you haven't subscribed to the channel, feel free to subscribe, take a look around, and then yeah, it'd be much appreciated. Thanks, guys. Have a good lunch, Joe, if you're still listening, and have a good break. And I'll speak to you all later. Ciao. Bye.